What's up everyone, it's Caddy with Money Vesting. So markets here very green, pushing higher. The entire sectors, all 11 sectors in the S&P 500 pushing higher. We did get a little bit of a selling pressure here intraday. So from 11 a.m. all the way till 2:30, 3:30, we did see the market sell off and give up most of the gains on the day before the rally coming back in towards the last hour, towards the last 30 minutes of the day, with the Nasdaq here up over 2.14%. We got the S&P also pushing higher, 1.65%, of the Dow Jones up over 1%, with the yields back over 3.685, almost at 3.7% on the day. So inflation numbers came out. CPI, I already did a video on that. Make sure that you do check that out, and where our focus needs to be moving forward, which part of the CPI report we need to be really paying attention to moving forward. Break that down in my other video. But in this video, I'm going to give you guys an update on PPI numbers. The producer price index is going to be coming out tomorrow at 8:30 a.m. Eastern, so we got to be ready for that. That's also going to be a bit of a market moving event, and we'll keep a close eye on what's going on with the banking sector. Of course, everything was pushing higher, everything was green in the banks, and we also had a bit of a volatility coming right back down to under 24 levels, with crude oil prices dipping below $70 to $73 per barrel, but we're getting a little bit of a bounce back higher on the day right now. So hope you guys enjoy this video and find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. The link to our Discord and Patreon is going to be down below if you're interested in joining us. There is going to be only 2 spots left for the investor early bird. So this right here, again, investor early bird, 2 spots left if you want to take advantage of that and be a part of our money investing community. Link's going to be down below. There is a 16% annual discount that does also expire very soon, and we are going to be starting our real strategy in April of 23 and our bond ladder strategy in the upcoming months with the T-bills. So link's going to be down below. So this right here was the CPI numbers. Again, we broke that down in my other video, but it's gotta come down in a way that it's actually more convincing, in my opinion. And the reason for that is because shelter prices, the main housing and rents, they're still pretty elevated. Right now, we're seeing a 0.8% increase month over month, and that's year over year over 8.1% for shelter prices. But all in all, I think this CPI report was pretty good, right? So it was actually a good number. 6% year over year, we're coming down to that level. 5.5% for core is a good number. But that rate of change, especially on the core side, is not pretty substantial, right? We're only going down slowly and steadily. Like the last 3 reports, it's been 5.7, 5.6, 5.5. So we're not really seeing a very convincing move down. Yes, we're seeing disinflation, but this is not really showing us, okay, the faster inflation went up, the faster it's coming down. No, the faster it went up, it's now starting to kind of stabilize a little bit. It's staying up there. But hey, overall, I like this report, and the market was very disciplined in the way that it was anticipating interest rate hikes going into next week. We're still pricing in for 25 basis points last time I checked, and that's a very good disciplined way for the markets to go into the Fed funds meeting, FOMC meeting going into next week. This is going to be the PPI consensus for tomorrow. That's the producer price index, and the month over month consensus is 0.3%. Year over year for us to come down from 6 to 5.4%. This is the producer price index. It's what wholesalers pay for their supplies, for raw materials, for input cost, and ex-food and energy. So core PPI month over month expected at 0.4%, and year over year at 5.2%, coming down from 5.4%, and ex-food, energy, and trade services consensus of 0.4%. So I think, in my opinion, that is going to be pretty much in line with what the expectations are. We are going to see a pretty substantial down move here in the year over year PPI, but month over month, it could be maybe a little bit higher, especially on that core side. We could maybe see that 0.5% once again on that print, and year over year for us to come down to 5.2. Again, it's not a pretty substantial move. It is improving, but it needs to obviously be a little bit more convincing if we are going to be closer to the Fed's target by the end of this year, because March is already here. They don't have a lot of time for us to get down to 2%. As I already mentioned in my previous videos, that it's much easier for inflation to go down from 9 to 5%, but it's far more difficult for CPI to go down from 5 to 2%. Right, the last bit of 2 to 3% is far more challenging, and will be challenging, in my opinion, for the Federal Reserve than it has been over the last, what we have seen 6 months or so, as inflation's rolled over from 9 down to 6%. Right, so 6% year over year. So that 3 percentage points have come off of inflation. That's really good on a year over year basis. But dropping another 3 percentage points is going to be far more challenging, because now you have to consistently be making sure that housing, rents, shelter, like those are the type of things that are keeping inflation still pretty elevated. Energy is coming down, food has been rolling over, especially on the aggregate basis, may not be on a more personal basis. You might not be experiencing that on a personal basis, but food prices on aggregate are coming down, but it's mostly shelter, energy prices, and of course the super core that we talked about is also going to be incredibly important. So if you take a look at some of the 1 month, 3 month, 6 month, and 12-month readings on an annualized rate, 12 month, of course, we're sitting at 6% and 5.5 for core. 6 month, we're coming down to 4.3, 5.1. So if you take a look at that 6 month number, that's the last 6 month worth of readings. It's a lot better than what we are seeing for 12 months, right? 6 months obviously has been, last 6 months, inflation's really rolled over. So 12 months accounting for last March, last April, like last May, June, July, when rates were so high, when we were obviously seeing inflation obviously go higher. And I think that's what we're going to see moving forward in June, July of this year, is that those comparables are going to be difficult for inflation also, and year-over-year numbers could stabilize a little bit in and around those levels. We'll see. Now, this right here was in headline. So Michael Burry says he's not seeing true danger in the aftermath of Silicon Valley Bank collapse. It's a very unlike Michael Burry to kind of say that, hey, there's no danger in the economy in the aftermath of SVB collapse. Usually it's the other way around. He's the one sounding the alarm and pretty much mentioning that there is danger. Apple reportedly delaying some employee bonuses as the company cuts cost. Another unusual headline. You never expect Apple, like a company like Apple, to be delaying payments to their employees or bonuses or wages or whatnot, as they are cutting costs as well. So Apple's also very much focused on cutting costs. And speaking of cutting costs here, Meta also to lay off 10,000 employees and workers after the initial cuts in November. And the company laid off more than 11,000 employees in November and plans to cut another 10,000 in an effect to continue to reduce cost and Meta's 2023 year of efficiency. The markets like these types of catalysts very much. Obviously, that's going to increase the count in terms of tech layoffs. Now, I've already covered this report before. There was talks about this. There were rumors about this in our previous video that I did on Meta. But of course, this is just coming into fruition, and we're getting an official statement from Meta themselves. And obviously, the Meta stock was up like 5 or 6%, I think, last time I checked. So 7% actually up on the day. And Google here pushing up almost 3%. Amazon green, Tesla pushing up over 5%. Microsoft higher, Apple higher. Nvidia pushing up, AMD up over 6.6. So very, very green day for the markets. Lots of momentum, lots of buyers stepping in. And we're getting a little bit of a shift back away from bonds over to equities, especially a more risk-on trade. If you consider tech stocks and cryptos as a gauge of a risk-on versus risk-off environment. So we're seeing a lot of momentum back higher for a lot of these sectors and a lot of these individual stocks as well. So all 11 sectors in the S&P 500 green on the day. Over the last 1 week, utilities is the only sector that's pushing higher. Everything is down. And over the last 1 month, we've got all 11 sectors red and pretty much down still in the last 1 month. Orange juice for the win, pushing higher, 4%. Lumber prices pushing up as well. We got corn, we got wheat, we got soybean oil, all pushing higher, with coffee and canola pulling back, and Bitcoin got up to as much as 26,500, then rolled right back down, and right now trading just about 25,000, and Ethereum just a little bit over 1,700. Again, it was trading as much as 1,785, almost as much as $1,800. Now, Signature Bank has been faced a criminal probe ahead of the firm's collapse as well, so this is also going to be a developing news. And we've already talked about some of the regional banks and some of the more SIB, systemically important banks, and that's one of the reasons why I put out a video, yesterday going over how there's going to be an opportunity in financial stocks, right? Not specifically regional banks, but some of the more larger banks, from systemically important banks or systemically important financial institutions. So sort of like the top four, and that's why XLF was at the top of the list. So, obviously it had a pretty red candle. So again, they were selling intraday, still up 2% on the day, and FAS also had a pretty brutal red candle, but still up 6% on the day. So those are two that are on my watch list that I'm definitely paying attention to at the moment if we do see any opportunities in these sectors moving forward. I'll definitely alert everybody in our Discord if I do end up taking opportunities moving forward there. So going over to the volatility first, and VIX over here, as you'll notice, was up in the last couple days. However, we have come right back off down to under 24. down about 10.4%, as we have seen a pretty substantial move in the market. So as S&P, NASDAQ, the Dow, they've rallied higher, volatility's come back down. Taking a look at VXN, which is going to be more on the NASDAQ volatility, you've seen just nothing but a lot of momentum for this as well, down about 9%, and it got up to as much as 32. So this right here was a spike of over 35% and then coming right back down. And same thing with volatility, right? The VIX, it got up to as much as 30, 31 levels, and it dropped right back down to lows of 23.74. So definitely be on the lookout. Again, Fed meeting next week, PPI tomorrow, and retail sales and consumer sentiment also coming out later this week, with GDP numbers coming out at the end of March. So we're not out of the woods yet. We're still got a lot of data to work with, and of course, more importantly, we've got the interest rate hike from the Federal Reserve, over which there's been so much uncertainty and so much debate whether we're going to see 25, 50, or 0. Let me know in the comment section down below, what do you think? And crude oil prices now for the first time seeing a bit of an overstretched breakdown here below the $70 level support. However, we have seen some level of support in the past year. So we were at these levels from back in December of 22 before crude oil pretty much rallied back up to low 80s. So it's possible that we see some buyers stepping in, but if they don't, hey, that's only good news for inflation, right? That's only good and better news for the upcoming inflation reports, because energy prices, oil prices, gas prices, electricity, everything will continue to start rolling over together, as natural gas has already been selling off. And now we're also seeing crude oil down over 6% for the month of March. If this trend continues, that's only good news for inflation moving forward. Talking about Ethereum, so we got up to as much as our resistance here at 1740, 1750, around here. This right here is going to be that level to watch for Ethereum. And for Bitcoin, we're watching 25,000. So this right here is a level that we're watching. So we got up to as much as 26,000 and change, 26,500. Then we also sold right back down, and right now we're fighting with that resistance for Bitcoin at the moment. Resistance all the way up to 28,000 next, if we do get a potential breakout to the upside from those levels. Going over to the yield curves, and as you can see right now, we're seeing a little bit of an uplift. So you can see that V-shape sort of pattern for the yield curves, or yields right now for the bonds. You can see that we're moving back up, and this usually happens if prices are coming down. So that's exactly what we saw. TLT, TMF, some of the longer dated duration bonds pretty much sold off in prices as yields went higher because of that inverse correlation. So a little bit of a reallocation away from bonds over to equities as we get that risk on environment. And it's very clear, right? I mean, the main goal and the main idea for us to really understand is liquidity, right? Where is the liquidity going? Yesterday, what we really saw was pretty much money come out of equities, go over to bonds. That's why the yields were dropping like a rock, 7% in one single day for 10-year treasuries. But now, today, the quite opposite, right? It's a very, very risk-on trade where you're kind of seeing that play out in front of your eyes. You're seeing bond yields go higher, volatility come down, and equities, especially risk-on equities, right? Tech and cryptos and discretionary not staples, but comm services, all of them pushing higher very, very strongly. Even semis pushing up very strongly. You can start to see, okay, this is the pattern here, right? Liquidity is coming out of bonds, going over to equities, and more specifically on the risk on equities. So even though everything was up, staples and utilities, but it was more so for a tech sector. Nasdaq's pushing higher quite a bit. So that's what we're seeing right now. That's why I want to be very careful and kind of recalibrate us to a point where, okay, just because the markets are pushing higher again doesn't make it right. And we got to keep a close eye on the valuations. Of course, NASDAQ here getting a very nice bounce off of that lower high, previous resistance from January of 22. So that's been the overall trend for the NASDAQ as we have been selling off. And now we're getting a very nice gap up and a lot of momentum back higher as well. So the good thing is that after this gap up, we didn't leave any gaps. So we didn't really leave a gap up here. We kind of came down to fill that gap and then pushed right back up. So that is actually a lot of momentum from the buyer side, right? To think about coming down, sellers were taken here. They were pretty much over pressuring, and the markets came down, filled that gap, and then the buyer stepped in towards the end. So definitely goes to show there was a lot of volume, there was a lot of liquidity, and the buyer sentiment was strong. Same thing with the S&P 500, green candle on a green day, and we didn't leave any gaps here. And again, came down as low as 3807. The support level was going to be staying put here, so it didn't quite come down all the way to that level, but getting a nice bounce back higher in the last couple of days. And the resistance really is going to be all the way up to as much as 4,100 around here. That's going to be the red line to watch for the S&P 500 moving forward. Talking about Apple first, and Apple here just pushing higher, up 1.4%, so a little bit of momentum back up. What we have really seen is a lot of consolidation for Apple, so it's just been inside that box, getting rejected, getting supported, pushing higher, pulling back. It's just been a lot of back and forth here, so resistance is going to stay put at 157. This right here is going to be that level to watch for Apple moving forward. Talk about Amazon. Amazon in a very similar situation, so lots of consolidation for Amazon over the last several days and even weeks. The next resistance really is going to be all up to 109. So this is a level that we have been talking about for Amazon for quite some time. And this is the overall downtrend, or in other words, the lower highs and lower lows that Amazon's been trading in for quite some time here. Support level is going to stay put at $80, $81. Very, very strong level of demand for Amazon at those levels. Tesla, look at that. Very nice move back up, 183. Covered calls are brewing. I can already feel it. So maybe a couple more strong days for Tesla, and we'll be looking at selling some covered calls. And that's exactly going to be the strategy moving forward, is to be trading the wheel strategy on Tesla with rolling options and doing all sorts of things to generate that premium, because premium on Tesla is actually really, really good. You can generate some very good premiums, even as much as 3 to 4% return collateral per month, although that's not going to be my goal. I'm going to be looking at a very conservative and safe strategy to generate 1.5 to 2% per month. That's going to be the goal, to kind of average out. That's going to be annualized a little bit over 19 to 20% per year. So that's going to be the goal with trading the will strategy. Tesla is going to be definitely on the top of the list for the stock, the type of stock that we do end up trading. But right now, 183, and if it gets up to as much as 200 again, I will be looking at potentially selling some calls once again to take advantage of the higher call premiums and be able to take advantage of the current shares that I already have. Support level is going to stay put at 176 all the way down to as low as 166. So we did get some buyers stepping in at that level. The volume was quite decent, not as high as what we have seen in the average 10-day basis, but still pretty good. And again, the next resistance is going to be all the way up to 201, $202 per share for Tesla moving forward. Talking a little bit about NVIDIA, and NVIDIA here up over 4.78%. So again, very, very reluctant. The negative divergence continues to play through, but we're not seeing any momentum on the downside. I mean, we do see it maybe a couple days here and there. I mean, for example, NVIDIA dropped about 9% here in a very short period of time in 3 days. But that, again, is not pretty substantial, right? It's not anything close to how much NVIDIA has pushed higher. So again, we're kind of inside this higher highs and higher lows, tapping onto this higher high still, but we'll continue to monitor whether this negative divergence plays through. And again, I'm not taking any short positions despite knowing that the company itself is overvalued. The stock itself is pointing to a negative divergence or overbought conditions because of the sentiment. The sentiment is so strong and the price is so stubborn that it's very difficult to kind of time it well. Next up, Advanced Micro Devices pushing up over 6.6%. So very, very strong move. Very nice move to the upside for Advanced Micro Devices. Resistance is going to be staying put over here. This is going to be that next level and target to watch all the way up to $96, $97. And we've also got a support staying put right over here. That's the higher low to watch for AMD as well. Very, very nice, consistent higher highs and higher lows. Talking about PayPal, and PayPal here on the move, up over 87 basis points, but a red candle on a green day kind of puts us in the same bucket of most banks. So a lot of banks, like I showed you, regional banks and FAS and XLF, a lot of them had a red candle on a green day. Same thing with Bank of America, red candle on a green day. Goldman Sachs here, we got red candle on a green day. JP Morgan, we've got red candle on a green day. UBS, we had pretty much a doji candle here, but MasterCard, we had a green candle a little bit. So let's take a look at Ally. Red candle on a flat day. So the point is that we did have a lot of momentum downward on an intraday basis for a lot of banks and fintechs with everything that's going on. Even though they were gapping higher, they finished green, we did still see a lot of intraday momentum on the downside. So support level is going to stay put at roughly around $67, $70. And of course, my fair value stays put at $70 for PayPal. Square was up 6% and a green candle on a green day, so pushing right back up, and resistance is going to be around here. This is the big red rectangle that we need to watch for as a resistance for Square. That's going to be sitting roughly at $83, $89. So those right there are going to be some levels to watch, and support levels are going to be staying put at $50 at $59 for Square at the moment. So we're seeing a lot of consolidation here. I would be very much interested in a long trade opportunity at $51 to $59. So those right there are going to be some levels to watch, but resistance, of course, staying put at $83 to $89 per share. Talking about Meta platforms, Meta for the win, up 7%, getting a big breakout past $194. And this right here was a previous resistance that we talked about for Meta. I feel like Mark Zuckerberg now understands and knows how to play the Wall Street game. That's kind of crazy to say, but I feel like now he understands how the market dynamics work, and he kind of is very subtly playing the Wall Street game. Like Wall Street wants to hear less investment in the metaverse, let's give them that. Wall Street wants to hear cost cuts, let's give them that. Wall Street wants to hear a year of efficiency and better sort of optimization of our core business, let's give them that. So it's like, the pivot that's happened in the last 6 months for Meta, like it went from like literally the at the bottom of the barrel at $87 to now $194. That's a 123% rally. It's one of the best performing stocks in the last 6 months, Meta platforms. And right, so last 3 months, it's actually up 62%. In the last 6 months, it's up almost 30%. But if you compare it from back in November, right, in the last 4 months or so, 5 months, one of the best performing stocks. So I feel like Mark Zuckerberg is now really understanding how the dynamics work and what Wall Street wants to hear. Now that can be both a good and a bad thing. Good, it can restore confidence. It can, drive that liquidity back higher. It can really, keep investors on board. But it can be a bad thing because if you're doing something for someone else just to make sure the price is stable, then you're not really focusing on your vision. Now, it's possible that thing and what investors want is pretty aligned. It's kind of like the same thing. But if that's not true, like if Mark Zuckerberg really wants to pursue his metaverse goals, but he's just kind of taking it slowly or not doing it as aggressively because that's not what Wall Street wants, then you're kind of going against your own sort of belief and your vision, right? So that can be both a pro and a con. I don't want to get too philosophical, but we're getting a very nice rally here. Nonetheless, 7%. I'll take it. We're getting a nice breakout back past 194, and we got a next resistance all the way up to this big red candle that we're watching for because we have gone rejected here in the past, and it's also been since the February 2020, right? That's going to be the level that we got rejected at before the pandemic for Meta. So very nice breakout. We'll see what's next for Meta, and this is going to be a new support at 188, 189 for this company. Talking about Netflix here, also getting a little bit of a consolidation pattern. We're very oversold, so I wouldn't be surprised to see some potential upside here for Netflix, and this is going to be that support level to pay attention to and watch for the company, and resistance all the way up to 386, 368, 369, around those levels for Netflix moving forward. Talking about Google here, also getting a bit of a move back up, almost 3% green, and the next resistance all the way up to these lower highs of 104, 105. So this right here is going to be that level to watch for Google moving forward. We're still in the context of this downtrend, so still making lower highs and lower lows, but that next resistance is going to stay put roughly at around 105. Support level is going to be inside this green rectangle, sitting roughly at $85, $86 per share. Talking about Microsoft, as much as I want to buy Microsoft, now it's gotten even more expensive at 260, 2.7%. I would be a lot more interested in 220s. Come on, Microsoft. Come on. Help a brother out, huh? Just come down to 200s, 220, and we'll have fun. I mean, really, the stock has been all over the place. It's obviously consolidated so much, but with the integration of AI and the fact that it's going to really boost the company's earnings and probably even put a dent in Google's search model and their business, I do expect more upside for Microsoft over the longer term. However, right now still seems a little bit on the expensive side. So 218, 220 is a level that I'm watching for Microsoft. And last but not least, we got Shopify, and Shopify here on the day up 4.8%, so getting a nice move back up. This is the higher low. This is the ascending support that we are validating every so often, and we've got a gap to fill for Shopify on the upside, sitting roughly at $48, $50 per share for the company. So hope you guys enjoyed this video and a complete update on the markets. Inflation came in line with expectations, slightly hotter on the core, but the market's still pretty disciplined when it comes to interest rate hikes going into next week, despite what's going on in the macro backdrop with SVB and of course Signature and all the other banks combined. But that being said, I would still be pretty cautious here. We just got the 2022 earnings per share, the price earnings multiple. I broke that down in my other video, so make sure that you do check that out. And valuations on an aggregate basis still seem a little bit stretched considering where we are with interest rates and inflation. As always, make sure that you drop a like, subscribe. The link to our Discord, Patreon is going to be down below. Remember, investor early bird, 2 spots left if you want to take advantage of that. And there's a 16% annual discount also available as well. As always, happy investing. I'll see you all in the next video.